It was a fifth down week in a row for the stock market. It looks like oversold conditions are just not enough for this war-weary market. This is TLDR Stocks, where I describe to you what happened in the last week in financial markets to get you ready for the coming week and hopefully weeks to come. War, of course, is the big headline for markets, sending oil to its highs of the week. Bond yields were up at their highs for this cycle. Volatility closed at its highs for its cycle. And stock prices down. It was all interwoven and related. All right, let's dive right into these charts. My favorite technical indicator, the percent of stocks trading above the 50-day moving averages, what I like to call AT54 above the 50, did not get to technical oversold, which is 20%. So I couldn't get bullish based on that indicator. It was quite a week. It started off strong, ended off weak. But interestingly enough, it did not go lower than it did the previous week. But that's, small solace, because the S&P 500 did close at levels last seen last August. And it was banging against its 200-day moving average resistance, which is that blue line. So it is even more bearish than it started the week at. And same thing for the NASDAQ. In fact, the NASDAQ is so bearish, it couldn't even trade up to its 200-day moving average. It too closed at levels last seen at the beginning of August. And then IWM, the ETF of small caps, somehow is still clinging to its bullish title. It's above its 200-day moving average, but just barely clinging on. And the trade that I did on IWM, I got overconfident and let that thing go. But that's the way trading happens sometimes. All right, let's just dive right into the charts that caught my interest for the